Stock market opening just a couple of minutes ago, and there was a pre-market pop. There were a couple of headlines that President Trump and Chinese President Xi were having a conversation. I haven't seen any highlights from that conversation yet, but also news that Europe may be lowering their basis interest rate points by about 0.25 basis points. So that may have been part of that as well, but there's a big red candle to start the day. Shana Sissel, the queen of alternatives, CEO of Banríon Capital Management, is joining me now on SuperTalk Mississippi. Shana, it's always great to see you.
Good to be here.
So what the hell is going on with the stock market? It's been pretty choppy this week, but we've rebounded since Liberation Day tariffs were announced and the market kind of took a hit. We're back closer to all-time highs. Are we going to continue to see any growth as the tariff conversation continues?
So what's happening with the stock market is what I expected to happen in the stock market. It's been really volatile, and I don't think that's changing anytime soon. I think the tariff conversations and the lack of clarity, the lack of transparency, the lack of any concrete idea of how these things will impact business affects the market, in fact, investor sentiment. And I think even if you take a step back, remove politics from the conversation, you can't expect businesses to be able to offer any clarity on what their forecasts are going to be for the next 6 to 12 months, even 18 months, if they have no idea what the business environment is going to be. And that has just resulted in a lot of volatility. If you even look at, say, NVIDIA, they are currently limited by some of the import controls that are put in place. But they don't know that those import controls are permanent. And if they're not permanent, when they may or may not be relieved of those controls, and how that will impact their business and what kind of business they'll be able to do after the fact. All of those things, if you think about it, make it really hard for businesses to continue operations smoothly, and thus make it really difficult for them to be able to provide investors with any clarity of what the next year of growth will be and what their revenue will be and what they can spend on and can they hire people and all that kind of stuff.
I should have made a side bet on how soon you would bring up NVIDIA, which is a company that you and I have been talking about for a long time, and you've been bullish on NVIDIA for quite a while. Now the company, I believe, is the largest company in the world. I think they've got the largest market cap of any company, and with their AI dominance will continue to drive, especially the tech sector, but the NASDAQ as well. And that's even despite some new competition from companies like DeepSeek. Where do you see the tech sector going, and how will NVIDIA influence that?
So NVIDIA is the largest market cap in the world on occasion. Sometimes it's Microsoft, occasionally it's Apple. They kind of go and switch depending on trading days, because remember, market cap is determined by the number of shares outstanding times the stock price. And so as the stock price moves, so does that bogey. So you can't look at tech in a vacuum. And I wouldn't even say that DeepSeek is a competitor. I mean, there was a threat for 5 seconds that it might be. NVIDIA's biggest issues right now are the import controls, and that affects them. It affects Broadcom. Palantir is another AI company that is not affected by, import controls, because ultimately they aren't providing hardware like NVIDIA. But we are in a transformative period as it relates to AI. And if you think about all the times that there's been transformative periods throughout history, whether it be the Industrial Revolution or the Internet Revolution, these things take time, and there's always major winners. Technology tends to kind of drive this change, these revolutions. And NVIDIA obviously is the leader in market share of being able to provide the hardware necessary for this revolution to take place. So that's really positive for the stock. It's also really positive for AI adjacent names like Palantir, like Vertiv, things of that nature. But it doesn't necessarily mean great things for all tech. If you think about Apple, for example, Apple just got downgraded yesterday by some of the analysts on the street. I think it was Needham that downgraded Apple, and that's because Apple is falling behind in this AI revolution. So it's not so much the companies as much as the revolutionary technology that is impacting the sector right now. And there will be winners and losers. And it's not even necessarily the subsector or sub-industry that they participate in, because you can look at Apple as a perfect example of that. It's execution and monetization of the new technology that will determine the winners and losers.
So many analysts, Shana, are talking about the 10-year Treasury, which hit, I believe, 4.3%. Fed is signaling that it might tolerate inflation closer to about 2.8% rather than a strict 2% target. Does that matter anymore? Do those fundamentals matter, or is the market being driven more by headlines, by tweets at any given time, and whatever the breaking news may be?
So it's hard for me not to roll my eyes at the Fed will tolerate 2.8% inflation. Historically, inflation sits around 3%. This 2% number came out of some random conference that happened in New Zealand like 8 years ago, and then they decided 2% was the number, but historic average of inflation is 3%. So tolerating 2.8% is like eye rolling to me. In terms of, where we kind of go from here and what yields will do, Jamie Dimon, the CEO of JP Morgan, came out and said he had concerns about the fixed income market. That kind of sent the bond market into a tizzy a little bit. Ultimately, the Fed is not going to cut rates until they see an economic reason to do so. There has been some data out there that maybe if the Fed was inclined and was looking for a reason to cut rates, would have given them cover to do so. But I think after everything that happened with the pandemic, which is an event that was outside of the control of the Fed and outside the control of the markets that impacted things, the Fed made decisions thinking, as it pertains to inflation, that it was transitory. That was the word that they used that now we all mock them for. And they were wrong. And I strongly believe that they don't want to make that mistake again. And so they're going to be reluctant to do anything with interest rates until they have some real certainty and clarity about the tariff situation, about how those things are going to affect the economy and how those things are going to affect inflation.
We're talking to Shana Sissel. She's the CEO of Banríon Capital Management and the queen of alternatives. I've seen that gold and silver are reaching all-time highs as well, but those aren't the only alternatives, which are growing in popularity because of the volatility of the stock market. What are some of these alternatives that people could look at?
So it's not just because of the volatility of the stock market, it's because they can actually access them today. If you look back even 10 years ago, alternative investment strategies were not broadly available to investors of all kinds. It was really limited to, the rich who met certain regulatory standards of which they were deemed to be sophisticated enough to invest in these complicated products. But there are ETFs out there today. I talk about this all the time. Obviously, Banríon Capital Management, my firm, and my area of expertise is alternative investments. That's why they call me the queen of alternatives. And I talk a lot about accessibility and using these types of strategies to help ride out market volatility. And so on the ETF front, there's a wide variety of ETFs now. Full disclosure, some of the tickers I'm about to throw out there to you are partners of my firm, meaning that they use our platform to work with advisors. But I run a portfolio of ETFs, a model, allocation model that these advisors use. And in that model includes products like BTAL, which is an ETF that is a market neutral ETF, meaning it buys companies that have low volatility, and it sells companies, it goes short companies that are high volatility. And so it's basically taking advantage of an anomaly in the market where low vol tends to outperform high vol. And that fund has done quite well. That's an alt. There's a firm that we use called CBL, or ticker we use CBLS. That's a Cloud Capital hedged equity fund. That is a long short, almost hedge fund like strategy that's done quite well. MRSK is a managed risk, uses options to manage downside risk in portfolios. while also using options to capture the market performance. I'm trying to think. CTA. There's a fund called HFND, which is run by a former Bridgewater portfolio manager named Bob Elliott that has great performance. I have crypto in our portfolio, so I use a product called BEGS, which is a 2-time levered tactical allocation fund. That's BEGS stands for Bitcoin, Ethereum, silver, and gold, or gold and silver. So it gives me that exposure. So those are some names that I think are really interesting that your listeners can invest in.
Shana Sissel, BanríonCapital.com. I've got like 10 seconds here. You've warned that we're in a potential bear market. Do you still feel that way?
I don't. I think we're in for a wild ride, but I don't think we're going to go into a bear market. Maybe a recession, but not a bear market.
Shana, great to see you. Thanks for coming on.
Thank you.
Wrapping up mornings with Richard Cross. I'm Scott Sands next year on Super Talk Mississippi.